Since the last edition of the Espresso, the world has changed. We are at war in Europe. After the aggression of Russia against the Ukraine has suffered lots of casualties and a destruction of large parts of the country. But the implications of the war and the sanctions against Russia and Belarus have a global impact. Depending on the closeness to the war, we have disruptions of production chains, but on a global level, we all suffer by the higher prices for commodities. In that respect, the US Fed only has to deal with the impact of higher inflation pressure, and therefore will fasten up their interest rate hikes in coming months. But we doubt that with the impact of that interest rate hikes, the Fed will go through all the rate hikes they envisage at the moment, because the US economy is likely to show some signs of weakness later this year. In Europe, the job of the ECB is even harder. We see that the economy in Europe will suffer most from this war in the Ukraine. We have reduced our growth forecast for the euro area to 1.8%, and the inflation forecast is up to 7.1%. Therefore, the euro area is in stagflation, and that makes monetary policy very tricky. We expect still that the ECB will go ahead with the reduction in net asset purchases and a first rate hike at the end of the year. Nevertheless, in this uncertain environment, where financing conditions are likely to tighten, the ECB may come up with additional measures. So 2023 might see an increase of interest rates and a reintroduction of net asset purchases. In this environment, Treasury and bond yields are likely to increase further in the next couple of weeks and months, but then a correction is likely. Regarding equities, after the collapse, after the outbreak of the war, we expect the first round a further improvement. But overall, we have to have in mind that the outlook remains very uncertain, not just because of the war, but also because of the impact of the coronavirus in China.